Welcome traders, Adam here. So first of all, Happy New Year. Welcome to 2025, which I am sure will not be a boring year. So let's have a look at the economic calendar. So first of all, drawing your attention, really I'll be focusing on Wednesday for the non-farm jobs numbers as well as the jobless claims on Thursday. And then of course, non-farm payrolls, which is also non-farm jobs numbers as well. So a lot of jobs data and unemployment coming out of the US this week. These tend to cause the most amount of volatility most months. And so that's really what I'll be focusing on. Otherwise, everything else is expected to continue and tick over. I'd be interested, of course, I guess, with CPI for the Eurozone. However, for the most part, what I am detecting appears to be relatively stable. So let's see if it's below that 2.1 or possibly higher. But yeah, looking good so far. Let's go to the charts and see how the charts are, what the charts are looking like for this coming week. Here we have the VIX. So the VIX really just giving us a sense of a minor spike here in volatility with regards to the early part of the holidays. Otherwise, it's coming back down to these normal levels. And when I say normal levels, I just mean low. The market heart rate is relatively stable. All right, so then let's have a look at the dollar index. So dollar index has clearly, undoubtedly broken outside of its range here on the monthly. We can see it is broken and running free and clear. Looks to me as though unless we have a bit of a break where we are right now at 109, we're likely to continue up to 110, where that will then likely create a bit of a pullback. So we had, you could see here, very interesting. We just had a really strong move. It's a particularly strong move without any kind of a decent pullback. We then had a minimal pullback, and now the market continuing to push higher. At some point, I will, of course, expect a little bit of a retracement, but I think it's fair to say it's broken outside of this range at this time. It doesn't mean to say that we can't see a bigger correction coming back down towards 105, back within the range, but I think it's pretty much at this time, unless we get a reversal this month, and it would be a bit of a surprise, that would put us within our sort of 3-candle range for a failed range breakup, but so far it's looking pretty much as though that is the case. When we have a look at euro dollar, you see it continues to push down. What I would draw your attention to here on the weekly, though, is the increase in the number of wicks that we are getting in these candles here. That shows the market putting on brakes. It's attempting to turn around. We'll see if that's going to succeed in doing that, but it definitely is not wanting to, and aggressively, it's not incredibly bearish. It is actually wanting to reverse and push back a little bit. And so that's why I say it wouldn't surprise me if we did see price come back up to 1.06 at this time. But yeah, it is, as I said, also here as well, also clearly breaking outside of this range. And so we can see price coming back up into this level. Will it find this is now, we've got support at 103.5. Will we find ourselves breaking up? If we do come back up and we break above the prior high here at 04, so let's call it 0460, then I would expect a deeper retracement up here to 1.06. Sterling. All right, so again, here we can see confirmation of that strong dollar. We can see cable has broken. We can remove this Fibonacci retracement. You can see here we've broken this upward sloping trend line, which just is confirmation that this general bullishness of the pound is giving way to the stronger dollar. So the dollar is very strong at the moment, and it makes more sense for me to expect it to see come down to test this level of support and resistance in the area where it is now, and again, then see how it manages to what it decides to do after that. We can see we're also seeing a retracement on the data here. And again, this is a very sensible place to look for continuations to the downside. So that would probably be Monday or Tuesday this coming week. However, if we break back past that and above this previous high here, then we're almost certainly going to do a deeper correction. So for example, if I just place this in here, let's just go through and sort of place this like that. There we go. So if we find ourselves coming up through this, piercing this downward sloping trend line and breaking above this high, then the momentum has shifted much more to the upside and we could see a change in trend. Dollar yen. So dollar yen looks very much as though it's got a little bit of a consolidation here. I'm just going to mark this range. A little bit of a consolidation here, almost certainly going to lead to a breakout. The question is, will it be a breakout to the upside or to the downside? Overall, that monthly continues to look favorable towards dollar yen, meaning that it looks as though that trend wants to continue pushing higher. Dollar Swissy, of course, as we've spoken about the last few weeks, very nice, strong double bottom. Does look as though that wants to continue moving higher. It's going to bump its head up against that 50-period moving average, but I also expect this to continue to attempt to push a little bit higher. And any pullbacks for me would be seen as potential buying opportunities. So in terms of swing trading, for trading on the higher time frames here, Dollar Swissy to me represents one of the potentially better charts to trade in Forex. Very nice pullback. I'd be looking for a bullish candle in this area. Let's just mark it. This is kind of where I'm going to be keeping an eye on for any kind of a pullback here and a continuation to the upside. Dollar CAD. So dollar CAD just continues on a tear. This is very unusual. It hasn't done this too often. Also, as I said, it's done more than 1,000 pips pretty much from the low here to the high without any kind of a retracement. And at some point, we simply just have to have that. It's got to come back and do that. But it isn't showing any signs of that just yet. In fact, it looks as though it's pretty keen on doing a consolidation breakout. So very similar here to the to dollar yen. Also looks as though it wants to do a consolidation breakout. And of course, the kind of thing that would do that would be non-farm payroll or possibly ADP. So if the market can't wait, it will respond on the very first high impact news that comes out during the week. But non-farm payroll tends to be the kind of thing that could, for example, we could see ADP pushes it out, for example, then it comes back and then it does the move for the week. But often the markets will tend to position themselves for NFP. Then let's have a look at gold. So gold is still operating within this larger triangle, meaning that we have a series of lower highs and higher lows, and we haven't got much clarity on that bigger picture. If I look at the monthly, to my mind, it seems as though it's doing a consolidation, potentially waiting for the moving averages to come back up to meet it here at about the $2,600. It's not as overextended from the moving averages, so this just, it does indicate sort of that inherent strength of gold at this time. We had the moving averages right down here when price was up here, and now we could see the moving averages or the average of prices heading up here. So I was looking for a deeper correction at this time. Price is consolidating, trying to tread water to stay where it is, waiting for the moving averages to come up here to meet it. So we might get a shallower retracement, but I'm not expecting a much deeper correction just yet. The price action looks very much as though it is managing to stay where it is and work out, take a bit of a breather before potentially moving higher. We'll see. Crude oil. Crude oil has broken upwards through this downward sloping trend line. So as I've said in the past, if we do have a break up through the downward sloping trend line and potentially a break above this high, so let me mark this high over here at 76.24, that would then be a failure of this bearish breakout pattern that has been forming. It's a descending triangle. It's been building up for a while. So what I'll be looking for again this week is how we finish in the coming week. Do we continue to finish closing upwards, especially if we break above here? Then I'm going to start to potentially consider longer term moves to the upside, and that bearish breakout pattern would be basically null and void. However, should we reject this, come back down within this and stay within this descending triangle, then I would expect that pattern to still remain intact, but not looking super strong at this time. Right, let's have a move. Let's move on to the global indices and have a look what's going on here. So we've had a very nice monthly retracement back down towards the moving averages. This in itself is very much sort of a U-turn. Effectively, price goes up, immediately comes back down. It's almost a failure to go up. If you combine these two candles, you get a combined rejection candle, which sticks us below this level of 43,140. So we have pulled back into the monthly averages. We are still producing a nice bullish trend on that MACD. Moving averages still look good. And so for me, I still see at this time, I still see the trend intact. I would see this as a monthly retracement, and you can see here the weekly is very much attempting to stay. We've got these bullish candles here. So what we could see is a head and shoulders possibly forming here. If this is the case, this would be the left shoulder and the right shoulder. We'd have to wait for a lower high and see how that forms. At this time, what I'm going to be looking for, especially as you can see, is trying to stay and hold at support. I'd be looking for a break above the high or a break below the low at this key level here, or a close just below that key level. Right now, we don't really have that, but this coming week, I think it's going to be key for that. The S&P, we could see potentially starting a bit of a retracement, but now already looking nice and bullish, and that weekly chart has maintained its uptrend. We've still got a series of higher lows here, but possibly losing a little bit of steam here. We'll see if that's going to be the case. So again, as I say, if we find ourselves closing lower this coming week, that would be significant with regards to that monthly picture. NASDAQ also, again, has had a nice retracement. Here, we didn't really get that Santa Claus rally that we often get at this time of year. And you can see here, it's very keen to continue to push higher. So a couple of months of really stalling probably makes sense. It overlaps with the holidays. Isn't necessarily at this time enough of an indication as to what the shorter or medium term is going to look like. I really need a bit more data to be able to make that assessment. I want to see if we do close lower. For now, it looks as though it's holding and it wants to push higher. Let's have a look at the Russell 2000. So the Russell 2000, again, coming back down to previous lows on the weekly. Also a monthly knockback into the moving averages, but also trying to continue back up. So yes, we might find in a couple of months that this has started. This was the earliest signs of a deeper correction, but that is only something that will start to become apparent obviously in the coming weeks. But for now, it's also just as likely that we could recover. This could just have been a, markets overstretched. It was very much due for a deeper correction, needed to take a break on either the weekly or the monthly. It certainly has taken it on the weekly. And so the question now is it kind of taken enough of a breather? Is it ready to get going? Historically, we tend to have really good runs before April, up until April, with regards to the stock markets. So we still should be looking relatively decent out there. Bitcoin. So interesting when we see quite a few of these, they've been a little bit unstable the last 4 or 5 weeks. They'll look as though they're kind of stabilizing a little bit more now. Here we can see Bitcoin has pulled back into the moving averages. Level of support. So let's just mark that level of support at around, there we go. Let's do it at 92,200. We've got a nice bullish candle forming here. And again, if we break this high, we've formed that swing low. And so this is looking very keen to keep going. The thing is, will it continue straight up, or is it going to start to stumble, and will we see that turn around? At this time, it is too soon to tell. We can see that monthly candle showing some failure at 100,000, but you can see immediately it's consolidated. It looks very keen to continue up. There was even a very messy head and shoulders forming here, but the market has not followed through. So interesting to me that we see crude oil starting to break its path a little bit. Bitcoin breaking its path a little bit. I've said in recent episodes that I think the market is acting unusual, as though there's sort of tequila in the punch bowl. I stand by that assessment. What I was looking for was a bit of a correction, and the correction we've got is just minimal, and so it's inconclusive. Unfortunately, it really is. Okay, Ethereum. Ethereum also looks pretty good to go, and I have to tell you, Ethereum is not overextended or overpriced at all. It looks very good. Come back to the moving averages, produce that swing low, so it is showing that it has very much got potential to the upside, which hints at the idea that Bitcoin could possibly go higher. All right, let's have a look at Apple. So we look at the Magnificent 7 here. We can see prices pull back. This is a very nice, healthy correction here on that weekly time frame. So this week I'll be looking for a bit of a bullish candle here. I would like for it to come back down, touch that 236 area, and then produce a bit of a rejection candle off that. The monthly doesn't look that overextended. Looks nice and healthy. Here we've got a bit of bearish divergence here, so we still need to work that out of our systems. Microsoft battling with its resistance at that 450 level. Let's call it here, battling in this area. So let's see if it continues to push up. This one actually, might not be that obvious to see it here, but this is also forming a little bit of a triangle here, a bit of a build up. So, triangles tend to break out in favor of the trend more often than not, but it's not a guarantee. I'm just highlighting to you here that we're starting to see a lot more of these. Here we might see it collapse to the downside here if that's going to be the case, but too soon to tell. So I need a little bit more evidence to see which way it is looking. You can see Amazon as well pulling back into the moving averages. Very nice retracement in isolation. This looks just picture perfect. Looks really good. Looks like it wants to keep going if that's going to be the case. This here forming a possible bull flag. It's interesting about a level of support. So again, this week I'll be looking to see if we hold or close below that level of support. That will change the picture. Alphabet as well. So Google battling here. There's a nice strong level of resistance. Let's just copy that up. Move this up towards where we are. Just leave it over there for now. And we can see price battling. Actually, it's closer to, there we go, closer to that 191 level. And so we'll see if it continues past, but it also looks as though it's going through that retracement there. Meta back into the moving averages, back into a previous level of resistance. This one is starting to wane for sure. You could see price action pulling back, failing to really make much of a higher high, and already coming back immediately, showing some bearish divergence there, showing a lot of exhaustion on the monthly here. I think I said this a couple of weeks ago. So my expectation for now, I think Meta is potentially, look, it has set up here bullishly as though it wants to continue, but I see in its future, I do see some potential stalling and failure in this area. So I'm just going to mark that area. That's where I expect it to struggle with for now. We'll see. Certainly losing momentum. Is it going to consolidate or correct down? We're going to see if that's going to be the case. NVIDIA looking good, looking pretty good. Nice little correction here. We've broken upwards through this very choppy bull flag. You see the lower highs here. We've broken up, swing low there. The monthly continuing to push higher. Doesn't look that bad, actually. This was a head and shoulders pattern that I hinted at in the past. I said we'll see if that's going to be the case. It isn't the case. Price is continuing to push higher at the moment. And again, this collection, this sort of collective behavior of, failure for bearish reversal or reversal patterns to follow through hints that there's a little bit of extra tequila in the punch bowl. It's not something I've seen very often. And so, look, right now it looks as though there's enough juice. The market wants to keep trying and keep going. We'll see. We didn't really get that Santa Claus rally. Will it be a delayed one? Will we get it between now and April and then get a deeper correction? Possibly. We'll see how that's going to be the case. Tesla here having this correction back down to the moving averages on the weekly, doing a minimum retracement over there, but it does count. So we'll see again if we get, this is a great example of what's going to happen next, because this is in itself is a relatively bullish candle. Very strong rejection of the lows. They're pushing back up, not closing green, but certainly I would count that as a rejection candle staying above that 400 level. So should this next week just fail to break above the high and then break the low, then that implies that this was just a knee-jerk reaction of the market to buy as soon as it hit lows, and there just aren't enough buyers to keep it going any further. And then we would see a deeper correction. And if that happened, we would see a correction down towards 300. So the weekly candle, the lows and the highs here are, I think, very significant to watch. And let's see how we close this coming week. So the lows here at 373 and the high at 427. We'll see what happens there. But that would be a clear indication. So if we break it, we'll see a continuation up. I think we're likely to see that. However, and again, I think this will happen across the Magnificent Seven. We'll see it across the markets. Could NFP be part of that? Could that be part of the news that triggers a bit of a move here and there? It's possible. We'll see how it plays out. So I'm going to leave you with that. But the volume should pick up. People are starting to come back from holidays. So I would expect this week to be a little bit more active. Again, I still think many of the markets are overextended. But instead of looking exhausted, they look as though they've had a bit of a breather and they just want to keep going. So I find that interesting because we're already quite overextended. But this could be because we're heading into new territory. We could see a new market developing here, which will, once it's set in its ways, will then start to behave more normally. All right, I'll leave you with that, folks. Have a fantastic week. Thank you.